Mayuresh Joshi joins in now, Head of Research at William O'Neill. Mayuresh, thank you so much for joining in. We're looking at Avenue Supermarts, a 25% jump in their third quarter revenues. Valuation-wise, the stock's never been cheap, but at 73, 74 times, maybe limited headroom for an up move out here. What do you think explains this down move that we're seeing on Avenue Supermarts today, despite a resilient third quarter update?
Afternoon, Mangalam. I think largely, if you probably look at the market construct itself, you're waiting for a follow-through day on the O'Neill lens, which is a move of 1.5% on the index itself, which should provide some element that the worst is probably over. However, we will also watch out for that 70,800 level, because if that breaches, you probably have further downside risk. Coming to Avenue Supermarts in general, I think the results specifically on the top line were largely gestated, Mangalam. The festive season this time around getting captured in the third quarter meant that the numbers on top line were expected to be very, very good. With a lot of stores swinging back in action, whether it be the mall stores or standalone stores as well, and all products or all departments working full throttle, the expectation was largely built in. The disappointment basically came in from two counts. One, in terms of the number of stores that have got opened. 4 new stores have got opened. I think the expectation was a little bit more that is expected to come through. And the second element is that with a lot of this pre-buying happening in the festive season, with what numbers are coming through, is urban and rural demand expected to come off, specifically when it comes to the non-food or the apparel part of the business for Avenue as well. So I think these two aspects is something that can take a hit, both in terms of how the margin profile will be and the bottom line. You're absolutely right. Valuations have always been very, very expensive for the stock. And therefore, I think both on the RS and the EPS rating of the O'Neill lens, it probably looks like a range-bound trade for Avenue Supermarket.
Okay, so high valuations and muted store count addition at just 4 in the quarter gone by has disappointed investors, and the stock has tumbled close to about 3.5% in trade. Did you have a look at the recently listed company, Radiant Cash Management? Very poor subscription, but subscribed only 53 times. The company then had to bring down the overall size of the IPO. Then the offer sailed through, and even priced at the lower end of its range of 94 to 95. But, you know, after that kind of response, when the IPO was open, today it's done well. It opened up 17-18%. Now it's still holding up with a gain of 10%. Thoughts on Radiant Cash Management at current levels, and how would you compare it with its peer, CMS Info?
Afternoon, Rima. No, to a large extent, I think the subscription itself was very, very muted, as you rightly pointed out, and as the street probably was giving it more time in terms of having a high conviction in terms of translation of numbers probably happening over the next couple of quarters. Peer comparison, yes, but to a large extent, we would still wait out because on our O'Neill methodology again, I think we do wait for an IPO base to probably take place. That might take a few days or a few weeks. I think if it fulfills our criteria for the IPO base over the next few days and weeks, we probably might have a look into that. But I've not, frankly, looked in great detail for the company itself. So I think we'll wait and watch.
All right. Hi, Mayuresh. Good afternoon. Mayuresh, what about APL Apollo Tubes? You know, we're getting some of these pipe makers who are joining in. As of now, they're saying that no slowdown whatsoever. In an otherwise, tricky market, APL Apollo Tubes is up close to around 3.5 to 4%. Any view on the space, and what do you think of APL Apollo Tubes?
So no, I think, afternoon, Nigel, I think generally, I think the space is in very fine territory. Why I say that? Because the kind of structural improvements that we've seen in terms of construction, the structural steel that APL Apollo Tube has got, which can be used in varied applications from airports to hospitals to industrial complexes to building in commercial units as well. That in a very, very quick amount of time. I think that augurs well in terms of the overall volume growth in the next few years. Value-added services as a percentage of the overall top line and the product mix as well has significantly improved and is expected to go even higher. The third element obviously has been a lot of inventory that played out on previous quarters' numbers should start getting liquidated. I think that is at least what the management mentioned in their transcript in the quarter gone by. And as restocking starts taking place over the next quarter or two, you're expected to see volume growth normalize going forward. Now, the targets that they probably kept over the next 2 years are very, very ambitious when it comes to top line growth in terms of margin performance, which translates into operating leverage and obvious bottom line growth that can come through. Should reflect effectively in terms of the EPS and RS ratings on our entire methodology. At the current juncture, I think the street would like to see how Q3 numbers basically play out. Is the liquidation of inventory largely done with? Second element in terms of input costs, which largely impacted their Q1, Q2 numbers. Being commodity consumers, as input costs start going down and as they restock in terms of their input materials as well, will we see accretion happening in margins and the commentary thereof from Q4 onwards? And how demand probably holds up in a slowing down situation globally and locally as well. This is something to be watched out for. So in my opinion, again, I think Q3 is going to be very, very critical. If the company is able to deliver and the commentary probably is very, very positive surrounding all these aspects, my own sense is the momentum will then continue for a stock.
Zomato is actually down around 5% this, over and above the decline that we saw yesterday as well. Mayuresh is still with us. Mayuresh, have you tracked the developments at Zomato? 4 big exits taking place in just the last few months. The CTO Gunjan Patidar being the most recent resignation. Do you think this makes a difference, or would you still look at the company's metrics, etc., and the performance that they've done on December 31st, New Year's Eve, as a positive trajectory?
Yeah. So, Mangalam, I think the December performance was exemplary, and every December we probably hear out these same stories playing out. Huge number of orders, some orders not being able to be getting delivered, so on and so forth. But I think these high-level exits does not augur well in terms of how the management perspective is viewed as a corporate governance angle as well. The second element, obviously, is also how the street will probably like to view this in terms of the reported bottom line, ultimately playing out in terms of valuing this company on an earnings matrix as well. So to a large extent, does not augur well these top-level exits. It is getting exhibited in the stock at this point of time. Better stories to play out, in my opinion, in the broader markets, Mangalam.